companies that, well, first we're going to talk about our investment outlook, talk about how we look at the market, how we make investments, etc. And then we're going to, kind of go into some companies, talk about some of our picks and why we think they would make interesting picks. We may blend that in with some of the things that are happening around us. And then each person will comment on the other person's pick, right? To kind of add some more context, why they think it may be a good idea, why they think that company may have some risk or some potential challenges to having a good year. And we'll just say it should be a very interesting discussion. So let's just roll the intro.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, so let us pray. We thank you, Lord, for this day. Thank you for the fact that we're able to meet as a community and discuss investing. We pray, Lord, that this will be a meaningful session for everyone who views. And I just thank you, Lord, for what we're able to do through you in Jesus' name. Amen. All right, guys, so I'll ask you to let me know who is here. Feel free to share the video. We want to get as many persons to join the conversation as possible. So let me bring on my guests here. First, we have Andre Thompson. Now, all of these guests are no stranger to the community, so we won't do any long introductions here. But let me bring on Andre. Andre, how are you doing, man?
Hey, evening, everyone. Jeremy, doing good.
Thank you for being here. Let me bring on David as well.
And nice, everybody.
Hey, David. And Julian Morrison will be joining us a little late. All right, he's going to be a few minutes late. So, all right, guys. So thank you for being here. A lot to discuss. So where I want us to start is I'd like each person to just kind of share what their investment approach is, how you look at the market, what are some of the things you look for, what are some of the things that going to your process of creating that watch list, right? Because this is the point of the discussion. It's a watch list. It's not a stock pick, right? So a watch list is a company that we think we may be interested in, or something that we think, our company that we think may have an interesting year, and we may or may not be interested in actually investing in that company, right? So that's a difference with what we're doing here. So I'll ask you, Andre, to go first, and then David, and then I'll share my thoughts there. So what's your investment approach?
All right, so pretty much my investment approach would be, stocks with a solid balance sheet, adequately capitalized, not too much debt, strong assets. Overall, there's a strong balance sheet. In addition to that, companies whose profits display an upward trend, I like those. So, especially for stocks that are able to turn around their operations, you find that those are the ones that are volatile. You'll see some wide swings in the prices, and that's where, for people who like outsized returns, that's where you find those stocks that have a turnaround. So, a case in point would be like, the tourism stocks when the pandemic happened, and, the outlook for them was bad. And then, once things started to rebound, tourist stocks, just pretty much return some outsized gains. So that's pretty much one of the things that I look for. So I like to assess the trend in profit, as well as the outlook for that company, as well as the broader industry and region within which that company operates. Outside of that, or to complement that approach, I like to look for stocks that are undervalued, stocks that the market tends to overlook, because, there's a lot of value there, and you get more bang for your buck when you consider those stocks.
Are you undervalued in terms of PE specifically?
Yeah, so the PE would definitely be approach, as well as the price, like a price to book as well.
Okay.
So yeah, and sometimes the data isn't really there like historically. So that's why it's important to assess the outlook for the company as well as the sector. Because if on the horizon in the near future or whatever your investment horizon is, you see profits increasing exponentially, then the stock can be undervalued, not despite what the P is telling you. The P could be telling you the stock could be at 30 times, but if there's going to be some strong growth in profits on the horizon, then it can be deemed
Yes,
undervalued.
and we've definitely seen that. I'm not ready to call any names yet, but we've seen that, right? Companies that persons thought were trading really high, then we see what the financial statement looks like, and then that PE just goes way down.
Yeah.
So yeah.
That normally happens, like for example when losses have been erased, or when they just deliver a blowout quarter. So
Yeah.
that's
Yep.
mainly my
Yep.
approach.
Yeah, man. Thank you for that, David. Any thoughts there on your approach?
Yeah, so it really comes down to, just looking at, as Andre said, some fundamental businesses and understanding where they are in their cycles. And the reason why that matters is, some companies, stock prices will just not move for a while, but the business will be expanding. And, at the same time, also comes back down to, understanding just the basics of certain things around you. So, for example, today, I explained to somebody, about the JSC rules about the publication of company results. And I was pointing out to that, several companies tend to have price movements quite significantly around when their expected earnings are supposed to be released. So, I was pointing out that, 45 days for a company's, at the end of each company's quarter, that release the results within 45 days. If it's in a financial year like a Wesync or a CPG or a Fontana or a Cygnus, that's either, the company does a 45 in 90, meaning publishing unaudited financials in 45 days and audited in 90, or the audited within 60 days. So like, for example, Wesync used to publish their unaudited quarterly in 45 days and then audited within 90 days. They do it within 60 days now. And, I spent somebody that in February and even in May saw a strong price movement for Wesync stock. And, right now we're seeing whereby companies are having a reversal to an extent in terms of business performance from the pandemic. So like your Mailpacs, and just a simple example, there's a decrease in revenue, which is expected, but at the same time, the company is in a much different fundamental position than they were before the pandemic. So I was looking back, so interns last week, Thursday, at Mailpac, and I was pointing out to them that, they're well above their pre-COVID projections from both a revenue and a profitability standpoint. So although persons are saying that the Mailpac team has run out, you have to remember that Mailpac themselves said, they're in it for the long run and they're fundamentally looking towards the future. And they have the dividend meeting this Friday, so that's a consideration as well.
Yeah.
But
Thanks,
yeah,
David.
look at the rules, understanding, the company cycle, so is that renewable energy getting more attractive? Is that you have more investments in a particular industry? Are there tax benefits, And you just build a case from that. And depending on your goals are, you kind of just look at it from, do I think the company is sufficiently cheap at this price? And not just from a nominal standpoint, but also from, probably multiples and even just the company's projected growth path. So I think it's like somebody that, although a company's PE might seem expensive right now, I pointed out that they have to remember that if the company's results are growing at, call it 100% compared to the prior year, then the numbers you're going to see now are going to be looking quite large, since the price is moving so fast. But when the company's earnings, quote unquote, normalized to where they should be, then the price you're saying that was expensive based on the PE you saw is going to become cheap.
Yeah.
Mhm.
Agreed. So so based on what you both said to me, I'm really interested in asking you this question because I think that a lot of new investors, they don't know how to set goals. So one of the things I used to hear a lot, after I've bought a stock, I'll naturally have the question, when do I sell? And I always hear, whenever you reach your goal. But how would a person know how to set a goal? I don't know if you guys can just give me just one quick thought as to how new investors can have a realistic goal based on how our market tends to operate. Like, what would be a reasonable goal? Or after you've done your research, now you've made a purchase, what is a reasonable goal to set, or how do you go through that process of setting a goal? Let me put it that way.
Okay, so I mean, it depends. Everybody, invests for various reasons. Some want generational wealth. Some, probably in and out the market, achieve certain specific goals, like maybe to purchase a car, things like that. So I mean, if a dollar value goal can be identified, then pretty much, once you've hit it, then by all means, if you've achieved the goal, then you can go ahead and do that. However, for like the wealth, generational wealth standpoint, um, it's important to know the company that you're investing in and to know what the company is really worth. So for example, if down the line, you do your forecast, you factor in all the news surrounding the company as well as the industry within which it operates, and you're able to project earnings. And from that point, you're able to, establish what you believe the stock value is, then by all means you hold the stock until you reach that standpoint. It's important to understand, however, that the research is an ongoing process. So you would have done an analysis or a forecast last week. Best believe that maybe a week after or a month after, something could change that could lower that projected price. So that's pretty much the first step. And then I mean, as I said, if the goal is to really be the first person to like the take, if you want just building that generational wealth, a important thing to consider is compounding, because when you take the profits and you reinvest it, it's pretty amazing how the principal amount that you would have started with, how it grows exponentially over time. Once you reinvest gains, you reinvest dividends, things like that, you'd be surprised at the pace at which it grows. For example, 100% return on $10,000 is $10,000. And let's say over X period of time, you continue to invest, you stick to monthly additions to your stock portfolio, and then for example, you get to that million mark. If you're able to generate returns at like 100% on $1 million, that's $1 million. So that's the effect that compounding has, in addition to just constantly topping up your investment portfolio. So pretty much when it comes to goals, it's relative. But as I say, if you're in it for the long haul, investing is your passion. It's good to kind of manage your deposits relative to your withdrawals and things like that. If you keep on taking out, eventually, the pace at which you'd want your portfolio to grow, it's going to be steady. However, if you're able to just find a plan and consistently add to it and reinvest gains, reinvest dividends where applicable, the effect of compound is amazing.
Yep, agreed. All right, welcome, Julian. So what we're doing here, we're just kind of, before we get to the watch list, we're sharing our approach to actually creating that watch list. And then I asked each person to kind of speak about how they go about setting a goal, right? Because we find that a lot of our new investors may not necessarily know when, or how to set goals, rather, that are maybe a little bit more realistic based on what the potential is for our market. So, feel free to share that approach to creating your watch list and, your thoughts on setting goals.
Okay, so good evening, everyone. For the most part, my strategy is one that is buy and hold. So I have a very long investment time horizon, not because I'm wealthy, but I just think that the greatest value proposition is investing for longer time horizons, because as Andre said before, there's power in compounding, and that happens over time. So that's not to say there aren't opportunities where we can be more tactical, meaning that, we see a play and we want to execute that play. and leave that as it is. Again, it's just a matter of context and knowing what is a play versus what is buy and hold and what works for you, what is your temperament. Some people might have a short attention span. Maybe it's not an attention span issue, it's maybe that's what they like. And that, different things appeal to different people. So I like to buy companies that are special. They have a special value proposition. They have a unique value creation point within the context of their market. And they are driven by very strong operators, or like visionary leaders. So, for instance, Cecil Foster of Fosrich is a visionary leader. When you look at how he has transformed Fosrich, you look at Michelle Chong from Honeybun and what she has done, that's a visionary leader. You look at the Chang family behind Fontana, that's a visionary leadership structure. Chris Williams from Proven, just within the context of having strong operators. I'm giving examples now.
Yeah.
I also admire William Mafood from Wisinko. Yeah, man. I think that Wisinko can do some different things with the cash pile that they have, but I like that he's very ambitious and he's always doing deals and he's launching new products and he's doing interesting things, going into new markets. And the funny thing about Wisinko is that they still have barely scratched the surface in terms of exports. And there are more people living outside of Jamaica than in Jamaica. And we see what Wisinko has done. So it's just, I like operators because they're the ones who make the money. And that really builds the story for the stock. Another thing I look out for is understanding and this is a newer one for me now. Not new as in last week, but just in my investing journey. Understanding the importance of the stock having a fan base. So if the stock has a very active fan base, it has an active following, you might hit your price target sooner than you realize. Right? But if it's not as widely followed, even though the case might be strong, based on other criteria, you might not hit the price target as soon, and that might not be necessarily a good or a bad thing. It's just a matter of gauging expectations. So, Pulse has a crowd, CPJ has a crowd. There are many others. They have their own crowd. Fesco have a crowd. Those stocks, whether them up or down, them just have a crowd, and them people that just stick to that. No matter what, man have artists, so them just stick to. Even when the artist not going good, them just say, "Oh, my artist that." Same thing with stocks. So, yeah. Those are my thoughts.
Okay. So, all right, cool. So you want to say anything specific about goal setting before we move forward?
Okay, let's get into the tangibles. So goal setting. I like to work with figures, figures that I want to hit. So, and I plan my year in quarters. So now is the end of June. I need to review what I need to do for July to September and from October to December to say, okay, where am I in the year? Am I behind? Because I already set a goal for the year, but I have to contextualize it by the quarter because a lot of things happened this year that I didn't expect.
Yeah.
So I need to say, all right, where am I? Let's say for example, I have a goal of, and some people choose to track their goals in US dollars. So you might say you want to hit $10,000 US, right? Across your portfolios. That's where you want to be at the end of the year. And you say, all right, how am I going to do that this quarter based on how this year has played out? Because we have to inform and adjust our strategies as we get live feedback from reality. Because when this year started, me never know, say, Putin did not go do certain things. You get me? And of course, all the other things that have happened. It's not just a conflict, but, it's just a matter of staying flexible. So I like to work in quarters and I like to look at figures and breaking it down in a review system based on that planning approach.
Okay. Thank you. So I think I definitely like what everybody has said, and for me, I try to, in terms of my watch list, I keep it very simple. I don't consider myself to have a very complicated or technical process. I'm looking at the business. I'm looking at their potential for growth, their strategy in terms of what I'm picking up from their annual reports or the statements or any piece of information that I can find about the company and their strategy. Are they going to be innovating in such a way that's gonna make a significant impact on the bottom line? Are they going for, very, very strategic cost cutting measures that will help them in a significant way? So it's all about understanding the business and trying to find the ones that I think are going to be positioned really well. I split my watch list into two. So I have a long-term portfolio, and that's for retirement. I do plan to retire early, so it's not very far off, but it's something that it's funds that I know I'm not going to pull for any reason for a very long time, at least 5 years. The focus there is just getting a sizable amount of units. If it's also a dividend company, I'm taking those dividends and reinvesting them. For the year, similar to Julian, I'll set a goal for the year. Once I'm able to get to that goal, the idea is just to know, keep building on that, and everything that I make for that year is typically reinvested. I'll rarely pull profits from the market unless I'm putting that into another asset. So last year, one of the things that I did, I took money from the market and invested in a piece of real estate. And the point there is that the money stays invested. It's not taken out for anything. As much as I can put in, that's what I do. So I'm always invested as much as possible. I do keep a certain amount in cash. You guys have heard me say that before. I try to keep at least 10 to 20% of my capital in cash for upcoming opportunities. If it is that I see something that's really good, I want to be able to get a sizable position, especially if it's short term. The shorter term the play, the more shares that I try to get, and that's because it's simple math. The more units I have, I can settle for a smaller amount of growth for good profits. So I'll do that. And then in terms of goal, I'm looking at. I set my goal based on what I think the company is able to do and where it is we are in that cycle for the company. So if I think the company has been undervalued, similar to what Andre would say, then especially if nobody's talking about it, no news, nothing big that's breaking, I see that as a great opportunity. And then I look to see where we are headed for the upcoming period. So if I think earnings season is around the corner, or there's some major milestone that's coming up, then I'll set a very aggressive goal. And the aggressive goal to me prevents me from selling too early, because sometimes get to the goal quickly, and then I'll remove that position, and then it goes 2 to 3 times that, which is why I also tend to take profit in tiers. I'm not going to to completely close a position. To me, that doesn't make sense if it's a good company. So that's a little bit onto how I do that. Hopefully this little discussion has been helpful for everybody who's watching, because I know some persons kind of have a hard time figuring out that part. All right, so this is how I want us to do this, guys. We're going to share a company that is on our watch list. We're going to say why it's on our watch list. What are some of the things we think would be interesting about the company? And then each person will say, I think that I like that because of so and so, or I see this potential risk for that company, so and so. All right, and then we kind of go around the table that way. Hopefully we'll get to the point of having at least two stocks each, so that should round us out at about 8, and we'll see where we are at that point, and then we maybe take any questions from the audience at that point. Sounds good? All right. All right. So Andre, you're up first, and then David, and then Julian, and then back to me.
Okay, so all right, to start it off, a stock that I'm watching. I guess the first one on the top of my list would be Trans-Jamaica Highway.
Hear
To
that.
give some basic details behind the stock, currently it's trading at around a PE of 30 times price to book, 2 times, and then we all know Trans-Jam pays an attractive dividend during that in the year around 7%, probably in line with interest rates on the market like repos and so forth now. But Trans-Jamaica, they recently announced the acquisition of, if memory serves me correctly,
Yeah, if
Jamaica.
I can fill the gap. They are looking to acquire Jamaican Infrastructure Operator Limited. They haven't acquired them as yet. They're starting negotiations. They're the company that Trans-Jamaican Highway has basically given the remit to actually operate the highway. So when it comes on to the toll plazas, those are not necessarily staff members of Trans-Jamaican Highway. Those are staff members of Jamaican Infrastructure Operator Limited. And same thing goes on for maintaining parts of the highway and so forth. And that's really it. Back to you.
Yeah, man. Thanks, David. So yeah, they're looking to acquire Jamaican Infrastructure Operator. I have confidence in the team that they'll be able to close the deal. And should they actually close it, I think it would bode well for Trans-Jamaica. So I believe, they pay JIO around 3% of revenues, I think, in addition to an annual fee. So I mean, when you look at 3% of revenues returning back to the company, as well as I think they said, it's pretty. It account the fees or the costs paid to GIO account for up to around 50%, I believe, of expenses.
No. It's for every $1 they earn, about 35 cents goes to GIO.
Okay, it's 35% expenses. So
you have something to share, Andre? You want to share?
I mean, I'm just looking at the Gleaner articles, and I quote, Anderson told shareholders at least half of total operating costs on TJH's books are attributable to the JIO arrangement. So, I mean, if they will be able, that will return to the company, I think that would bode well for the company's profit.
But the thing is, here's a question, Andre. What about the additional expenses that will come along? Because we know much JIO's revenue is basically TJH's expense. But the thing is, how much of that what is the actual net profit that comes on Jamaican Infrastructure Operator, GIO? That's the bigger question, because if it's the case where GIO has probably a 5 to 10% net profit margin, then they're not really getting that much back in essence, figure what I'm alluding to.
But if it is that they acquire it, the expense that was formerly there will just be a part.
No, so when you consolidate, that expense will no longer show up on the group consolidated line, but the other expense, which is the staff members and so forth, and those other expenses that GIO has for itself, that will come up on the profit and loss statement. So the expense can go back to the company as a dividend to pay to us as shareholders, but that's why I said just take it in context and strides.
Are you saying it's negligible, the impact of the acquisition?
Correct. So while persons are a little gung-ho at the moment about everything that should come out of the acquisition, I'm pointing out that, remember, when you so basic accounting, right? You have a company, and then a company acquires a subsidiary. You consolidate financials, right? New set of financials. You eliminate intra-company expenses. So in this case, that expense line will be removed with respect to GIO paying TJH. But the other expenses associated, in this case, paying staff and other expenses, those cannot be discounted. And the thing is, we don't know what GIO's actual net margins are like. That's what I'm pointing out.
Okay.
You know what I'm saying? Because
so that's variable then, us not understanding the accounting side from GIO.
Not necessarily the accounting side, but what they actually do as a net profit, or even the profit before tax margin. So if it's a case where the company does, for example, 50% net profit margin, then that's a massive win for Trans-Jamaica Highway.
Mhm.
But with the flip side now, where it's about a 5-10% or even 15% net profit margin, then the increase in the water and the TJS is going to be very negligible, if you get what I'm alluding to. So, example, Spiritually, right? Spiritually acquired the company in St. Thomas that makes Aki, right?
Mhm.
That company did $73 million in revenue, right? But in Spiritual to consolidate the financials, they had to remove $71 million from that because that was product that the company, the subsidiary, sold Spiritual. So the company only made $2 million in actual external revenue. So that's them pointing out that you have to really sit down and look at these things piece by piece to actually put the puzzle together. So I'm not saying it's a bad acquisition. I'm just saying before you say you're going to see a massive jump in profitability, remember the expense line will just be removed. Or what about the other expenses that are already there for GIO that we don't know about? Because the thing is, GIO is still technically private. It's owned by Vince's and Boys. I can't pronounce French record to save my life.
Yeah,
So what I would say is,
the thing that I think about here, David, is that from the perspective that if a company is seeking to make an acquisition, you assume it's for a strategic benefit. Either it's going to benefit them in terms of cost savings, or it's going to benefit them in terms of the profits that they're able to now get from that company. So
the synergies, because remember, let us say another part of the country has a massive highway development and GI will get that development, then that's new revenue streams for TJH.
exactly.
And remember, TJH themselves are restricted towards Jamaica. They themselves are actually plan to operate in the Caribbean as well. But the thing is, the Caribbean is still developing, but that kind of shows you the pipeline that is there for them as well.
Yeah.
And remember, when they acquire GIO, that they can extend their arrangement with GIO to 2034. So although the highways TGH operates highway to 2036, GIO has a contract to manage the highway right now to 2024. So they acquire them, then it's more likely that the GIO is going to get the contract back to manage the highway going all the way to 2034.
Yeah.
And
So I mean, what I get from what you're saying is there's definitely more information we'd want to know about that specifically. But I mean, Andre, it's your pick, so this is.
No. It's actually one of my picks as well. But that is why I said, I just giving this little context right here because as much as we all want to be right and be gung ho about this acquisition, we need to remember how acquisitions work. It's one thing if it's an external company that does business entirely separate from you. But when it's a company that basically gets 35% of your revenue, it's a different story. If you get what I'm saying.
Yeah, man. We know that you're the one that brings the sober view, man. And so yeah, man. Appreciate that. Julian, any thoughts on TJH? It's on my watch list as well. I shared that I think in January's video. It has not exited my watch list. I think in addition to that acquisition that we heard about, there is the project that is supposed to be completed early next year. There is
Williamsfield, 28 kilometers. March 2023, it was 64% complete up to this March.
Yep. So there's that. There's also the increase in rates, which doesn't benefit the ones taking the toll, but in terms of profitability for the company, I mean, so usually with these things that introduces like increases, you may have some customers who choose to go with an alternative, but for the most part, I think especially for those who have to use it for work, who have to use it for persons visiting, going out of town, those are costs that they'll just have to absorb, unfortunately. So I mean, it bodes well for the company itself, assuming that expenses are more or less the same. So yeah, I think those things just put it in a very good position to have a very good year. Julian, have anything to add to that?
Boy, Jeremy, I don't like how you have a smile on your face, Almost like you laugh after the man. Anyway,
No man, I'm not. Man, wait. No man, no man, no man. I'm just really enjoying this one because I'm glad that somebody else said it and not me because it's been on my watch list for a long time.
Okay, so I think it's an interesting asset. I think it's an effective inflation hedge, first of all.
Agreed.
That's very important. The other thing is because it's a monopoly, it has the ability to hold its case in terms of value proposition. I mean, it has no competitors in our market. So that's another advantage. It's a very strong dividend opportunity for investors looking for dividends. You know, there aren't many great dividend opportunities on our market, in my opinion. But that could change down the line. But as far as dividend opportunities go, that's another plus for TJH. The thing with infrastructure assets is that sometimes profit doesn't tell the entire story. So I have to look at cash flow as well, because we know that profit sometimes is affected by non-cash items like depreciation. And we know sometimes the depreciation charges can be big because it's so asset heavy. So sometimes you have to juxtapose the profit with cash flow, especially as dividend investors. But that's not a negative. It's just something to keep in mind. But yeah, I mean, there's reason to be bullish. They have a clause built in so that they can keep on hiking the rate as necessary. And they're executing that now. They're exercising that right now. I have a concern though.
There you go. Because I was gonna ask if anybody has any concerns.
Yeah, so it's not in relation to the viability of the investment. I'm really thinking of the other side of the coin, because if you're really looking at where our economy is, the fact that we're in a transition phase now, we're in a slowdown, and you're looking at cost of living. So for class one, it's going to be 340 after July, and that is one way, right? So that's 680 for people who have to use a toll per day, class one that is, and that adds up, you know. So
It does.
what does it, so the argument is, what does it really say as it pertains to cost of living? I mean, I don't think it's the end of the world on one hand, but on the other hand, I mean, if you look at it from a lifestyle perspective, you know, you look on it in terms of wages, and you look on it within the context of how much that would cost per year, you know, that would be 680 multiplied by 5. That's a work week, and then multiply that by the number of months in the year and the number of weeks in the year. That really adds up. So a significant portion of wages will go into the toll.
But
For persons
you
who,
see, just like a company has cost of goods sold, I think unfortunately the toll has to be cost of earning your salary, kind of thing for most people, because I think the
yeah,
reasons for using the toll will remain the same regardless of the price, because the
no, definitely,
alternatives weren't
Yeah.
attractive because of the inconvenience. So
no, 100%. Because what's funny is you have people who don't use the toll and they're like, oh yeah, man. I mean, there are alternatives, right? But if you really look at it, it's not a true alternative in a sense.
yeah, and and we realize the expense um, a little bit at a time. So even though for the year it adds up to a lot of money, the same reason why instead of cooking at home and bringing it to work, we just choose to go to a fast food restaurant. We're spending $1,000 at a time, and not 40,000 that we may spend over the month to buy fast food. It's kind of the same thing here. We're willing to pay a little bit more mentally for convenience. We know it costs us more. We know that if we leave out 30 minutes earlier, maybe we take another route and save the 380. But because we know that we're not going to likely be able to leave on time consistently, we just say, okay, I'm gonna have to take that 380 as an expense, and let me just find a way to make more money on the other side.
But Jermaine, here's another thing about it. If you're a person who has to travel, for example, for business, the toll road is probably your best option if you're being realistic, because
Yep.
in the toll road is an accident, for example, there'll be someone there to help clear up at least to permit the road flow easily. If there's accidents on the whole main road, you can have massive delays, and that's just the reality. In the sense that much as we say people they don't want to use the toll and everything else, It's one thing to say you're going to wake up early to leave, but with everybody in St. Catherine, how much more early can actually wake up sufficiently to reach the office, which is probably locked in and reach already, and actually feel like you want to do work? And it's just a kind of dilemma, right, in the sense that the time and gas that you're going to be spending on the old road just might not be worth it. And that
Yeah.
is where you see more companies give staff the leeway to do more work from home.
Yeah,
Yeah.
you're gonna pay for it.
It's the same reason why a company like JPS is potentially attractive for persons, because it is a similar situation where, I mean, what's the alternative for 95% of the persons who use it?
Yeah, pretty much. But
Yeah.
overall, the case is good. The case is good. It's just that sometimes, profit is important, and that's what we use to pay dividends. But
Yeah.
we want to look at cash to put it into context as well.
Yeah,
Because
man, agreed.
And one thing to add to that context, Jermaine, Trans-Jamaica Highway has a $225 million bond they have to pay. And they also want to pay us as shareholders. So they have to get the balance somewhere, because although their financials are in USD, they collect basically all of their revenue in JMD. So you have to account for that in reality, which is, in this sense, you have you have a revenue in one currency, but mostly consider another currency which tends to go up in value as time progresses. And the thing is that the agreement itself gives them the ability to raise the rates, but it's also enshrined in law. So that just trying to make an benefits of what's also the North South Highway.
Yeah, man. Yeah, man. So I mean, it's something that I see. I mean, to me, there are just a lot of opportunities. There are some seasons where I think persons may try to find alternatives, but I think based on how things are currently set out, even if you try an alternative, I don't see that being sustained. You'll just try to figure out how to maintain expense in some way. And as a potential shareholder, that bodes well for you if there is a product that the company's customers have a very good chance of continuing to use.
Don't
And
forget gas prices.
that'll be raised for a company that I'll mention later on. We'll get to the gas prices at some point. All right.
No, but that is really it. Like you're gonna take what, an extra probably 5 kilometers or whatever
I
of
see
burn
what
the
you're saying.
gas.
So you're paying for it either way. Yeah. All right, David. Thanks, Andre, for that first one. David, you're up.
I was actually gonna say, SBL.
Okay.
No, I know you don't like me to mention a company,
No,
but
no, no. I mean, so put it this way: you feel free to share it if you want. I just personally won't comment on that one, for obvious reasons.
I understand. But the reality is that Mayberry has been a great value contributor for both SBL, for SBL shareholders for these last, call it, 4 or 5 years. Because, Mayberry took the decision to increase its stake through MJE. And, you have Gary Pitt as the executive chairman, and you have Chris Berry on the board as well. And the company has just transformed itself quite significantly over these last couple of years, because they did $1 billion in profit in the first quarter, which is the first time ever done it before. And they're just looking to use this network that they have already in Jamaica to expand further into the region. So someone pointed this out. You have certain things in Jamaica that you can go in the corner and find. You can go in the corner and find somebody saying either L.E.A.R.N or Observer. You can probably find somebody selling some Carrera cigarettes. Or you can probably find somebody selling a lotto, or in this case, cash pot offering, or, in this case, SPL outlet. And for SPL, they are offering additional services for businesses through their current network across the island. Something that is very difficult to match. If you get what I'm saying?
Yeah, I get what you're saying. Again, I mean, other guys can comment on it, but I'll definitely withhold any thoughts on that one. So Andre, Julian, I don't know if you guys have anything to add to what David said.
No, none on my part.
Julian, any thoughts on that one from David?
Well, it's a very interesting company. It's not really one of my favorites because bias. It's a personal bias. Let's put it that way. Because, and again, this is maybe a controversial take, but I don't see gambling as a creation of wealth. You're really transferring wealth from the losers to the winners, and I personally don't believe in that. But hey, it doesn't make the company a bad one. They've been able to grow their earnings. They've been able to diversify their business model. They aren't a pure play gambling company anymore. It's more of a gaming enterprise, and it has some other entertainment related value creation channels in it. So it's becoming more and more interesting, and it's something that I want to watch unfold. I just hope it doesn't become too much of a conglomerate in the sense, because sometimes when a company has too many tentacles, it can be a bit of a challenge to keep track of, because on one hand, where you might have a lot of opportunities, so to speak, to earn revenue, you can also have a lot of exposure in terms of risk as well, in terms of markets, in terms of product segments, all of those things. So it would be nice if the company strikes a balance between revenue diversification and not going overboard. But yeah, it is definitely a company to watch. Just not my cup of tea.
And Julian, I was going to point out that it's not necessarily everybody's cup of tea, but the reality is that this diversification in different services is quite interesting because they're looking to the bill payments and at the same time also build out their loan business as well, and they are just pushing with the fintech arm pretty well, which is interesting, and they have experiential services as well. So all these different business opportunities that they're having right now are just manifesting itself quite well through their network. And it's a gaming company and they make the money from Lotto, but at the same time they're finding different means and ways to generate revenue, which bodes well for diversification in the company and for the shareholders as well.
Boy, David, it sounds like you're the CEO, man. I love that.
No, let me give you a joke. No, Julian, I was at the AGM back in May, and Gary said, "Mr. Hello, yes, Mr. Chairman, yes, Mr. Chairman. And can David Rose please can David Rose please propose a motion? Just you would have enjoyed the meeting." And at one point, Gary was in this corner. I'm like, Gary, and Gary's like, "Oh, what? Can David Rose please propose a solution?" Trust me, it was a fun meeting.
Yeah.
Regarding Isville, I think what's an important space to watch will be the entrance of the new players within that space. And at David's point of diversification, I definitely agree that it's one to watch to see how their diversification efforts will contribute to revenues generated now. I think currently, primarily the bulk of the revenue is still from gaming, and we're talking billions of dollars in terms of revenue. So it'd be interesting to see how their efforts, for example, in microfinance space and all the others, plays out over time. But it's easy, and I think it was two new entrants or one. Interesting to see how that one plays out. So I think SVL has long benefited from pretty much being a monopoly in terms of the betting and gaming space. So that's changed now. So it's one to watch.
Okay. All right. Thanks, guys. Again, unfortunately, I can't comment there. The only thing I will say, because I know some persons probably wondering why. As a faith-based investment community, we stay away from companies that we believe are having a direct. Let me try and use the best word here. The impact of what I believe a company like SVL has on the country, though it may be a profitable company, is one that I'm personally not comfortable with. And so, specifically for that reason, whether myself, whether my co-founder Renee, we took a decision years ago when we just started the community not to speak specifically about two companies. Careers is one, SVL is another. So while we have guests who are, definitely not tied to our own perspectives, are free to share, we personally will not, comment on them. We won't review them. We won't acknowledge them in any way. So, thank you guys for sharing that. I personally have no, comments on it. So, there's a question there from Damani. Re SVL, no mention of the back.
I mentioned it.
Okay.
I mentioned Provincial Services, which is the back office subsidiary that is now becoming a revenue earner. It was a cost expense and it's now becoming a revenue earner for the business. So that's what I was saying. The network for SVL is continuing to generate more dividends, so to speak.
Okay. All right, Damani, hopefully that helps. Okay, if there are no other comments on that one, Julian, I think you're up for your first pick, for your first watch.
All right, so the stock that is on my watch list is Fontana. So the reason for this is that the company has a very unique combination of what we call consumer discretionary and pharmaceuticals, right? So consumer discretionary is, another word for it is retail items, things that people spend on when they have disposable income. So we know about consumerism, we know about people buying things because they feel for something nice. That's a big thing on Twitter, you feel for something nice. And what's interesting about Fontana is not just the products it sells. It's about their overall retail experience. When you walk into Fontana, it feels as if you're in Florida. You don't remember that you're in Jamaica. We're not disrespecting Jamaica. It's just that sometimes we have an image of Jamaica in our minds, and that image is no longer there when we're in Fontana, as it pertains to retail. So it's about the package, the atmosphere, the setup, the store layout, the locations. The footprint is very interesting if you notice. It's always at, or usually at, a high traffic area near a stoplight or within a mall. So there's very heavy foot traffic. So there's almost always a natural spillover in terms of people coming over. Then there's the natural brand equity that the company has built over the decades. Now, in terms of the management of the company's resources, the company generates quite a bit of free cash flow. The margins are very healthy. Even though there are supply chain challenges, the company still manages to eke out attractive margins. And it shows that the company is actively managing its inventory. And they are very, very skillful in terms of their purchasing. So they will do a lot of forward buying. They'll try to negotiate deals, buying in bulk. And it's really a matter of having a value proposition that can remain attractive to the user base. The company has a loyal crowd, not in terms of the stock itself, but I'm just talking about the retail experience, the people who go to Fontana. So not just a matter of saying, yo, may I go pharmacy, may I have coal. No, it's not about if you have a coal or not. Fontana itself is a retail experience. People might say, hey, let me just pop in. Parking lot is always full, no matter the size. And you know what's interesting? I think Kevin O'Brien Chang, one of the principal operators of the company, he was saying that the Barbican location was established in 2013, but in my mind, it was always there.
Yeah.
And that just speaks to the story of the company. And if I'm not mistaken, the driver, right, is not necessarily the retail items, even though it's a big part of the L.E.A.R.N. But the driver of profitability still is the pharmaceutical products. So that whole hybrid offering has done a lot for the company. Again, we all know it's more than just a pharmacy, it's an overall retail experience. They're about to expand into Portmore with their location. But what we need to think about is the actual impact it's going to have in terms of the overall branch network. Because recently on Taking Stock, Kevin O'Brien Chang was saying that that they're looking into building a warehouse by ferry side. And what that would do is help them to move inventory faster so that they wouldn't have to travel longer distances from a logistics standpoint. So it would help them to keep the store stocked so that they could sell in greater volume. And of course, mitigate against supply chain challenges. So that's the first thing. The second thing is just because we hear of a Portmore location doesn't mean that just people from Portmore are going to go.
Yeah.
Remember, St. Catherine is one of our larger parishes and it's one of our most heavily
It's the fastest growing parish.
populated parishes.
Yeah.
So in terms of population density, it is also high. So it's large and it has a lot of people at the same time, right? So what story does that tell? It therefore means that we will get people from Portmore, we will get people from Spanish Town, we will get people from other areas in St. Catherine. And the fact that it is right by Price Mart, which has huge demand from a retail perspective, we will get a lot of spillover traffic. So when you put all of these things together, the case is compelling. Kevin O'Brien Chang was saying that he expected the profitability to grow by about 16% by his own estimate. I think that is a decent baseline estimate. When we think about what's going on in the economy and the fact that we're going through a slowdown, there might be a concern there, but the fact is, Fontana typically appeals to persons who have the wallet share. They're not rich people, but at the same time, they're not poor. They're persons who are pretty much in a segment that can absorb higher costs. And the fact that they have a loyal following and the brand equity, and they're selling pharmaceutical products, and they're selling an experience, and people still are going to feel for something nice in a recession, it still means that the benefits more than likely will outweigh challenges in that case. So that's really the case for Fontana.
I look at it as so though that same so while we're still in the pandemic, I see an opportunity for them because they have the type of products that would appeal more to persons who would maybe travel.
Yes.
So instead of traveling, hey, let me just see Fontana has it. Services like the Starbucks or services like I think the Wendy's, the one by Waterloo. So you're able to kind of do more of what you'd want to do in the same space. Yeah, man, I'm actually, I think after the Portmore one, they're probably going to be opening a new location, maybe on the other side of the island in a few years. I would not be surprised with that.
Yeah.
When they were first about to IPO, I was concerned. I was like, who would go into brick and mortar in what?
Mistake, Jermaine. Mistake.
I think knowing the market is important, and our market still values that a great deal.
Yeah,
So
and they do delivery as well.
Yeah, they do
Delivery as well. But again, Jermaine, all right, so let's go a little bit deeper. Remember, in day-to-day life, most persons are not like you and I, Jermaine. We are nerds. We spend most of our time inside. Jamaicans want things to do. They want the road. Them not stay like we. They want somewhere to go. And the fact that there are a lack of attractions, right? There are a lack of things to do in general on a comparative basis. Fontana fits into that because people want places to go. And they like to go where people are. And where are people? The parking lot ram. There's a variety of things. As I said, there's Starbucks. There is Wendy's there. Upstairs, you can get ice cream from Candy Craze. And there are a lot of things that you can share with your family. It's a family experience. You have things for kids. You have things for mommy. Mommy can go look on curtain.
Mommy is the one shopping. So I see her in the chat. Guilty. Yes, mommy is the one.
Yeah, it's the ultimate mommy stock. Put it that way. It's the ultimate mom stock. And we know moms, she control the purse. Say no more. Say no more. Salute.
I do think it's definitely one that my concerns in general are margins. It is a company that's on my watch list as well. I like them. I think that there's going to be some opportunities coming up with in the next 6 months. And as I said, I would not be surprised if it is that they have something else in store in maybe 2 to 3 years. And so I think they've done well in building a brand that people look forward to shopping at. And I think that there are opportunities on the e-commerce side that they could grow for maybe the parishes or the markets that they don't have direct access to. I think they could also even go throughout the Caribbean, build, Fontanas in Trinidad or any other country that there are opportunities for as well, because we also have persons who may value that brand across the region. So it's just a lot of opportunities I see. My only concern is margins for them, especially based on where we are. We're talking about increased toll, increased gas, increase, in inflation all across the board, and that is one of those maybe products where you may say, well, let me try and conserve a little bit so that may be impacted. But again, we're talking about persons maybe not being able to make the mental decision. So you may say, all right, I won't go this month, and then probably next month you spend twice what you would have spent in the 1 month, because your brain says, well, I didn't get to go last month, that kind of thing. So
All right, Jeremy. I'm asking you a pato, and please don't take it as anything rude. But just a level with your man to man. When you and Renee go on date night, right? And she said, boy, she want like ice cream. She might not necessarily want Devanos. Suppose she want the Candy Craze. You not care about the recession, boss. I've got the Candy Craze, right?
You know what? I'll allow Renee to speak for herself. She's saying she's in the chat right now.
Yeah. She probably choose violence. I'm sorry. But I'm just saying that, and then again, we have to remember that a big part of the driver is actually the pharmacy still. Yeah. Even though they have all these amenities, a huge part of the profitability is coming from the pharmacy itself. And I am bullish on medicine in Jamaica because, all right, the other side of it is we have an issue with population aging. So we have a lot of our young people migrating in droves, but they aren't being replaced fast enough. And because of that, the demographic profile of the country is changing. And when we have an aging population, it means that the demand for healthcare is likely to increase over time. And we know healthcare is a necessity, and that is inflation resistant. And not only that, but our parents' generation, their demand for health services is going to spike in the next 5 years, because in terms of health and how your health deteriorates, it's not a straight line. So at 60, and I'm not wishing anything bad, we're just dealing with probability. So at 60, everything is fine, everything will work. People say, everything is working, my hand them, blah, blah, blah. I'm not no pain or nothing. And then the next 5 years, my elbow kind of hurt me sometime, but everything good. You see, the next 5 years after that, when you hit 70, different argument. You start feel pain when you never feel before. You can't get up the time I usually get up. So the point is the demand for medication and health supplies, etc., is likely to increase significantly in the next couple of years because of what we're talking about in terms of the population. So when you add that to everything else we said regarding the retail side of it, trust me, I call it a printer. Fontana is a printer.
So Joe and friends raised something. Well, I said, let me post it here. Wait and see. Jamaicans are getting aggressive about controlling their spending, and even though he's a part of the investor community, he loves to see that. So it's one of the things I've thought about, because channels like this one, communities like this one, where we're seeing more and more persons being more conscious of what they're spending. But I still think this movement is still very small, right? So it may take years to see that widespread impact, especially because though we've done a lot to make progress in terms of the financial literacy space. I was saying this to Julian some weeks back, that to me, the market in terms of persons who consume this content and are maybe investment focused or money management focused are still, to me, very small, right? So it is something I think we'll slowly see, that sort of mindset over the next few years. I think we will see companies being a little bit more focused on providing value and not just, you know, here's the product, here's the price, you know, take it or leave it kind of thing, where consumers are a little bit more conscious about value and not necessarily price. But yeah, I just wanted to raise this one because it was, you know, mentioned in the chat. I think we'll see
Jermaine,
over time. Yeah,
can
David, go
I
ahead.
add to the Fontana discussion that just went a while ago? I know Julian was going quite ecstatic for candy craze and everything, you know.
Not me,
So
the customer base. But go ahead.
no, I bought candy craze for a friend's birthday recently still. So don't worry, they have good
And
business,
I
but
was there before, and Julian just gave Renee ideas, so I'm gonna have to deal with that. Thanks.
Oh no.
no, but like the thing is, as you said, it's the experience. And the thing I like about Fontana is Fontana has associated services at their locations, which bring you to there. So bring you there. So like if you look on Twitter, for example, your people said they went to buy Fontana to buy one thing and leave with five things.
Yeah.
And that is the kind of, you know, consumer mindset that you have in the US where, you know, you want to buy one thing and it's in multiple. And the thing is, it's kind of hard to replicate that in other locations when you're supposed to be on a budget, for example. Because over time in the supermarket, there are the pharmacy at the back, consumer items in the middle, and at the water location, and you have your tech shop at the top, your optical store, you have your candy craze, you have your Jamaican entrepreneur products. We got Margale with TCP things. You have, you know, engraving services. So there's
Yeah.
so you have the makeup. So you have all these services which are going to when you come into the store in the first place. And once you get in, you're going to be seeing things which is eye candy, and you're going to want to spend. And I think it's to point out, Julian, I did an interview with Anchang. Well, an interview was I asked Anchang for an article right there about the whole distribution center, and she pointed out, you know, that when it comes to distribution center, they also need to remember that Fontana does small distribution for some companies. So that distribution center that Fontana has can rent out the space to other companies to store their goods there, and basically earn revenue from that as well. So it doesn't necessarily have to just be a cost line for Fontana. It can also be a massive win for them as well.
Yeah.
And the funny thing is, when you think about it, with Fontana, you know, and price might be right there in Portmore, you have a lot more persons who are going to want to come there who couldn't get the services before, because although Fontana is in, I believe it's sent in Ocho Rios, Montego Bay, Manchester, and Kingston, and Savannah Lamar, there are persons who just cannot get certain experiences unless they come to Kingston.
Yeah.
So, for example, PriceSmart, you have to come to Kingston and Red Hills. No, instead of you driving from, let's say, Manchester to Kingston to get PriceSmart goods, you can go to Portmore. And that's just the beauty about Fontana's segment and their approach. By focusing on giving multiple services that will get you to spend more inside the store, they will generate more revenue. And the thing is that Fontana is, as somebody pointed out in the chat, a higher stock cost relative to other location or businesses. But the thing is, you're paying for the convenience. And you know, it's just funny to look back at right now, Fontana, I mean, it's $1.88 or is it $1.89 for the IPO, and they were $10 right now. And the thing is, who knows, Fontana might go to Draxhall and, you know, might even go in the Caribbean. Because the thing is, if you have an experience that you can replicate elsewhere, that's another stream of income. And the thing is, you have to operate this location either. You can't franchise it. And that's just the beauty about Fontana and in the Caribbean. The Caribbean is their oyster.
Anything to add, Andre, to Fontana?
Fontana has always been a start that I've liked personally. Strong brand equity, and you know, as you guys would have said, it's a great experience, like a great shopping experience. And I think the expansion in Portmore is definitely going to move the needle with respect to earnings. You know, Julian spoke about the population density of Portmore and all of that, and I think it's going to move the needle in terms of revenues and so forth. My only concern with Fontana at this point in time would probably be, you know, the way how cyclical stocks tend to perform. So, and when I say cyclical, I mean specifically be speaking about the discretionary products. So like not really the pharmaceuticals, because if you're sick, you're sick. But the things that are inelastic are elastic in demand, I should say. So I mean, liquidity is pretty much being mocked up. Interest rates increasing. Today, the central bank raised interest rates by 50 basis points. Globally, the Fed has been raising. A lot of central banks has been raising. So pretty much what you're going to see is that debt is going to become more expensive. So, for example, normally when debt becomes more expensive, consumer demand tends to diminish. So certain things that we don't need, we don't have to rule it out entirely, but we'll probably buy less of it. So I mean, so for example, boy, let's say me and my girl go to Candy Graze, and let's say back in better days, I'll probably buy one milkshake or something. If my girl wants it, she can get it. But what I really me probably go say, oh, get a water, please. Or if it just kind of clutch back, kind of.
Or just go to Wendy's and say, yo, babe, we'll get a frosty float.
Isn't me? And she get it, and then me just hold it till me reach home, find something in the fridge. So it's I think it's something to watch. It's a risk and a threat to the operations, as long as inflation is high, because I mean we were already paying for everything else. So we spoke about the toll, can't avoid that. We spoke about the gas prices, we can't really avoid that. So I think what consumers will try to do is to cut back on other areas.
Things that they can actually cut back on.
That they can actually cut back on.
You have loans to pay as well, which are going up.
Yeah, I mean credit card, for credit, the variable rates on interest loans and things like that.
No, but Andre, remember, you have variable rates that are going to increase, and you have existing facilities that are going to cost more as well. Mayberry increasing the margin facility from 12% to 15% as of Friday. So that's another thing to look at, and that's the reality of it. Companies trying to space that consumers cannot avoid by choice are just going to be benefiting this environment.
Agreed. And so I mean, it's definitely a good stock, and especially for the long term, I think it's a great play. I guess this one can be open for discussion. I know that there's a Fontana in Ochi, there's a Fontana in Mobile, in Mandeville, there's two in Kingston, one in Portmore. David would have made mention about maybe expanding beyond the Caribbean. You guys have any insight as to specific locations where you think additional branches would move the needle, given that most of the places that I would have made mention to are pretty much the more heavily populated area and have the kind of market that have the disposable income to can purchase discretionary items that Fontana has to offer relative to other bargains.
No, but remember, Andre, Fontana bought the location that was at Barbican in 2013. Because I remember growing up and passing by and seeing that I think it was on a Zans before. So, Fontana doesn't necessarily have to step a new physical outfit themselves. They can just buy an existing company that is already there or an existing location and attribute it to their taste. And the thing is, the customer base just won't leave because they continue to go the same way. So, if you look at it from that perspective as well, where they can just acquire a location or a business and the customer goodwill will support the customer float, the business float.
Yeah, but I'm asking what new areas you think would it be able to expand?
Draxall, I said Draxall earlier, Draxall. Elite Diagnostic, Nussford Express, CPJ, just my business have gone to Draxall in the last 3 to 4 years. Yeah. And you have more developments being built along that side. So you also have the introduction of the L.E.A.R.N airport right now. You understand?
So question, you would see the proximity to the bypass one being a threat to, for example, the Draxall operation? Because I mean, Draxall...
Not Draxall, I mean Ocho Rios.
Yeah, bypassing.
No, but remember, Andre, the same thing we said about Fontana with respect to Volatile and Barbican, which are much closer compared to Ocho Rios versus Draxall. And Fontana keeps saying, the water location doesn't cannibalize the Barbican business. But in the day, the brand itself grew and they got more customers coming to any location altogether.
So what in the event that they don't erect a flagship location like the Waterloo?
Because someone's saying here in the chat that the one in Portmore is not going to be like the one at Waterloo. It's just going to be a Fontana only, not like Starbucks, Wendy's, and the whole experience that you have at
No,
Waterloo.
but the thing is, remember they kind of rent the space inside the store, so you cannot ignore that.
Okay.
So I'm saying the model that you're seeing at the Waterloo one, that's the flagship location, right? It has the Starbucks, it has the Wendy's. Will it continue to expand at the same pace that they did for the most recent expansion, being the
No, I don't think so, because remember they have a massive space at Waterloo, and although I think the former location is going to be quite sizable, I don't think it's going to be in a similar size to the one right this year at Waterloo right now. So that's a concern as thing about it. So are they going to expand in Portmore and they're going to get the traffic in context? The big thing is the space itself is going to probably not allow them to introduce those other businesses. Because I think I remember seeing a Starbucks in a photo right next to the new Fontana location. So that's something to consider as well.
All right. So, for example, we were talking about the customer experience of the Waterloo location. Is that experience, pretty much on par with established locations like, for example, the Mandeville branch, the bypass branch at Orchard.
The customer experience is there, but the reality is that in terms of the same service conditioning, I don't think it's there. So I found the picture, right? So the Fontana image that I found for the Portmore location, it has a Starbucks right next to it.
Okay. So there is going to be a Starbucks here, but I say Daman is saying in the chat that on the interview with Kalila, they said there won't be enough space to rent the inside, similar to how they might do the one.
No, the thing is, the Starbucks is right next to them. It's not necessarily the case where, remember, in the case where it's going to be inside the location, it's right next to them.
Yeah, and also in the same interview, he was saying that it wouldn't be as big as Waterloo, but it would be bigger than Barbican. I think there was another location that he benchmarked it by saying that it would be larger than X, but smaller than Waterloo. So in other words, it's going to be maybe one of their medium-sized locations, put it that way. But the fact is, they're gonna have spillover from PriceSmart, which is a beast.
I was just about to get to that. Actually, see where Robert brought it in the chat. I mean, what is the impact that PriceSmart is going to have?
I think it's more positive than negative, because
no, it's more positive.
Yeah.
Yeah.
Go ahead.
Go ahead.
It's more of a compliment, because the two are standalone retail experiences, and they can't be substituted. They're more of complements. So, for example, to my mind, again, remember, I'm not a mom, so like I don't have that psychology unlocked. I'm guessing now, based on observation. When you step into a PriceSmart, the psychology is not the same as going into a Fontana. In Fontana, you are pretty much going for things where you feel what name again? You feel for something nice. It's a feel for something nice experience, right? And people feel for something nice very often. We need to factor that in, right? Not everybody is frugal, and we have a lot of impulsive buyers. So people buy based on how they feel and how they think, how the item looks, and that drives a lot of sales. PriceSmart now, you're buying in bulk. You're getting groceries, and you're getting your groceries at a deal. You're getting a lot of items at a fair price. So you can buy 10 of this at a reasonable price per unit, as opposed to going to another supermarket and getting it only 3 or 5 times at a higher price. So you're really going for a bargain deal, and you're trying to buy things in bulk. That's different from Fontana. In Fontana, you're not trying to buy stuff in bulk. You're giving into your
human emotion.
You're giving into your inner child. Put it that way. You're surrendering to your inner child. That's how I understand it. You
Yeah,
feel for
man.
something else.
Part smart to me
And
seems
someone in chat just mentioned it, Jeremy. You can highlight the comment, whereby price smart you go for goods that are basically in bulk, and with Fontana you have quick pickup items, and the thing is to even distinguish even further. Although price smart has optical services at their new branch in Portmore, Fontana has a pharmacy. So that's something else have to recall. There are services that Primark will not offer just because Fontana opened up across the road. That's not the reality.
yeah.
So so the thing is, if Primark and Fontana are very close, you just stop by Primark, get your goods, or you just stop by Fontana first, get a prescription and everything else, go to Primark to get the quote unquote perishable goods, and then you go home. And the thing is, you don't have to be in Portmore to go to those locations. Yeah, for a lot of persons who have cake sales or other businesses that go to PriceSmart just for those services.
Yeah.
And the thing is, Montana can offer other complementary services like I mentioned, engraving, the printing services, the business services, and so forth. That's another revenue driver because persons are more inclined to come to the location. And the thing is, once Montana gets you inside, it's the experience I need to sell you to get to sell other services.
Yeah. Price Smart is more like a once per month. Fontana is probably every weekend or every other weekend kind of thing. If
Every time you go to feel like something nice and just pass Fontana, it's like your wallet's open.
Yeah,
guys,
when you
stop,
see the
stop. I
when you see the green F,
I don't want to give our female audience the
Jermaine.
impression that we're blaming them for the Fontana. Okay? We have to take accountability on both sides for the budget. All right.
Yeah, man.
So I mean that stretch in Portmore is definitely a vibrant one, like where Fontana and Price Mart is. So the general consensus is that it would complement Fontana's offerings.
Yeah.
As I said, my only concern, and as I said, if Fontana is definitely like a good stock for the long haul for me. It's just a good stock all around. No matter the investment horizon. The feel for something nice though, as I said, does it really relate though to all the locations, or is it just the flagship one? Because I mean, if I gauge myself, the flagship one, I like it. I would drive from far to go to the flagship one. But let's say the flagship one wasn't there. I don't know if I would,
Yeah,
go
but
out.
it's more of it's so different locations can mean different things for that different market, right? So I think that
So
for
wait,
somebody who,
just to interject 1 second. As I
Yeah.
said, I think the Portmore location would do great. But to boil back to my first question is just the expansion after that. As I said,
okay,
within
I see what you're saying.
within the Caribbean is definitely a space. But I mean locally,
So you don't see
like,
Montego Bay because somebody mentioned Ocherios. Do they have one in Montego Bay? Is it?
yeah, I believe there's one in Montego Bay.
They do. Montego Bay and Ocherios are have a location in each capital.
Okay.
Yeah, so I mean, like the major cities, there's locations. I mean, they can always add additional locations. So pretty much all I'm saying is the bump in earnings that we've seen, which would have mostly
Okay.
emanated from the flagship one,
Yeah,
and the
yeah,
bump
yeah.
that we're to
So
see.
you think after this Bowmore location, they're probably maxed out in terms of potential opportunities, is what you're saying?
I wouldn't say I think so. I would just say
It's something to watch for.
something to watch, something to look out for to see what
Gotcha.
can happen next. Yeah.
All right, cool. Yeah, I think we've been talking about Fontana for a good half an hour. All right. So I mean, wait, who's up? Okay, I think I'm up. So I'm trying to decide on the first one for me because so you guys have shared two of my picks already. TJH is one. Fontana is actually one that I'm interested in as well. But I would say the one that I'd probably add to this discussion is Fosrich. It was on my list at the start of the year. And I think that so when I had them on the watch list at the start of the year, I didn't know anything about stock split or anything like that. I think that makes it interesting for me still, because we're still waiting for that. I think that there's just some more to come for it. Whether or not I think it's at the price is maybe a little bit. I'm not going to comment on the price itself now. I think I'll stay away from that. But those who saw opportunity early took advantage. It's all I'll say about that. But that is one of them that I think has opportunity just based on. I first had them on my radar when I was doing research into the companies that would have been impacted by construction and the continued development in that space. So I had a few companies on the list at the time. I had Lumber, I had Carib Cement, Phosphorus. I also was looking at the real estate companies, but as we know, real estate stocks do not do well in our market for some reason. They don't seem to get love in terms of that narrative. Those fans that Julian mentioned, I don't see a real estate company having fans to that effect. So I ruled those out quickly. And I was looking at Phosphorus from last year, actually, around August. And I think with the things to come for it, I think it's one of those that I'm waiting to see now. I've seen, I think so the stock split that we had before Phosphorus would have been Massey. I think the price of Massey kind of maybe had persons not see the outcome of the split that they were hoping for. So I don't think it'll be the same with Phosphorus in that regard. And I think the money, all of these things you're sharing relates to Phosphorus, PVC, partnership, Blue Emerald, build out a multi location. Okay, yeah. So I mean, that's yeah. And Julian, I think he even spoke about it earlier on taking stock earlier this year. He did a review on it. I don't know if you can maybe find that one away, share it in the group for persons to check out that segment you had shared on it. I did mention it at the end of Stocks to Watch episode 1 for this year, so you guys can check that out as well. So that's mine. I don't know if anybody has any comments or thoughts on it, really.
For me personally, definitely one to watch. Mr. Foster, you see the efforts Fontana has been doing. They've not been a quiet company, PVC manufacturing, transformer repairs, all the works, expansion and all of that. I guess what I'm mostly going to watch is to see how it grows into its price. So that is definitely, I agree with you right there. It's definitely one to watch.
Yeah, I think Phosphorus's best days are still ahead of it because of what it does. It actually manufactures the PVC pipes. We're going through somewhat of a building boom. The issue is that the supply chain challenges that we have, and they are still material, pun intended. They still have the potential to squeeze construction spending a little bit. We could start to see a slowdown in that subsector. But the fact is, between the fact that the demand for infrastructure and housing inventory is so great, number one, and two, the attitude of Cecil Foster, I'm willing to bet on those two factors outweighing the challenges around higher construction costs, creating a squeeze. So I feel like he will still manage to find a way to eke out gains where that is concerned. But the slowdown in construction spending is a real concern because feeling at the pinch on the ground.
Yeah. Go ahead, David.
No, sorry, I interrupted Julian. What I was going to say was, the company has some grand ambitions. Where we saw where their first quarter's profitability almost was to the level of the entire financial year, which is pretty substantial. And the fact that the company poured more than $80 million in the first quarter into Blue Emerald, which is their associate, that's interesting because it either means two things. The company might push themselves up to the 50% maximum for recording an associate, or they just might eventually make Blue Emerald a subsidiary. And the thing is, in we spin it, it's a good position for them because the PVC business is one thing, but transform a business, that is the big money. Because the reality is, putting power distribution underground is not cheap. Couple communities in Jamaica, or actually new communities in Jamaica, do it, but otherwise, we're always going to be having these light poles being hit down by crazy drivers in terms of speeding. And the thing is, if instead of JPSing those transformers were repaired overseas and instead using fast switch locally to Blue Emerald, that's just cash flow coming quite strongly onto the company's income statement. And the thing is, the proposed rights APU, when the shares if we're planning to offer, it's more likely actually going to improve their capital structure, because right now the company's debt equity ratio is around like 1.5, and First Global Bank actually, when their loans, which First Global Bank said that they can surpass 2.25. So the equity raise in this case is going to bring that ratio down and potentially clean up some of the debt off of their books. And we're just looking forward to seeing the company can actually get more of those sales converted to cash, because that's one of the big issues I had with fast growing over the years, which was high debt load, take longer to convert to cash from receivables, and it's an issue. But the thing is, they're selling more, they're doing more partnerships, and the market is responding to their performance. It's one of the best performance stocks year to date, and the companies are going to go into their, at the end of this year, they're going to go into the 50% tax remission. If that equity raise kicks off the barman, fast is going to be in an entirely different realm.
Okay. Are you finished, David? That's
I'm finished.
Okay. All right. Anything else? I am waiting to see, of course. So let me just add some more to this here. When a company's on a watch list for me, I want to kind of look to see how things are on a quarter by quarter basis. Because it's a watch list. So I'm watching to see what is happening. So of course, what will Q2 look like? What will be the result of the decision to raise additional funds? When will we actually confirm things around the well, I think the split is confirmed, but I don't remember those details. David, is it that they're supposed to have another meeting before the split is confirmed, or that was finalized already?
No. So the board would have met and discussed the stock split and the equity raise, and they put it forward in the AGM notice. However,
when is that AGM?
July 12. It should have been last week Tuesday, but they pushed it back to July 12.
Remember that. Okay.
And the stock split has been pushed back as well. So but so the thing is, the company doesn't need to do any other meetings once they get approval for the stock split and for the equity raise. The stock split date would be July 27, which would be the split date. So once the shareholders meet at the AGM, it's a done deal. We're coming on to the equity raise now. We just won't know what method they will choose. July 27, for those asking in the chat, we just won't know which method they will choose, because with interest rates rising and everything else going on, And based on the company's ambitions, you don't know what they might plan to do because, as I said, the company can clean up the debt side of its balance sheet. It can start business lines, but what method will they choose?
Yeah. So I was raising that point to say that you want to kind of see how things play out in that regard. So for me, it's really kind of waiting on those things. When when I see a company that's interesting to me and I go through that quarter by quarter analysis, if I get the feeling that I want to double down, then I double down. If I feel like I need to step back a little bit, then I step back. So just kind of watching to see how things play out for them and just kind of take it from there. All right. So all right, so that was me. So let's do one more round of this. Took us about an hour to go through that first segment, which is fine. So you're up again, Andre.
All right, so with first, we're talking about the construction boom. So I think a long time stock that I've always been watching would be Carib Cement.
Why?
Yeah, pretty much that the whole royalty up to 4% took a toll.
It's not even about, well, yeah, that was a big thing for me because I had them last year. I was very very optimistic on them, and just the way in which, it's not even the fact of what happened, but how it was handled, the feedback and the response from the market, and just even since this year, I mean the way in which they did the dividend declaration, which wasn't really a declaration, really, it was supposed to be a recommendation. And yeah, I don't know, but finish your points first on Carib Cement. I would say where we
Yeah, I
go.
mean, most investors weren't pleased with the 4% royalty. And then the stock wasn't spared. I think that the high was like around, it touched 120.
Yes, it went to 146 briefly, I
One for
think.
it went to 140, and then the market just sent it right down to 60 dollars basically. So the question is it oversold? Because when I look at earnings for the most recent quarter, being the March quarter, um I think they hit revenues of 1.59 billion or 1.6 billion. Looking at the
I think
historical
they're now
trend,
debt free, if I'm not mistaken. They've cleared most, if not all, of their debt.
yeah, that adds to why I'm watching it. And as I said, that the 1.59 billion was actually the highest quarterly profit as far back as I've been tracking it. And mind you, this would have factored in that 2% royalty, as well as inflationary pressures worldwide, supply disruptions, and all of that. The management team was pretty much able to deliver record profits. So I'm watching it. You know, higher. There might be some construction might be curtailed. I mean, in theory, with higher mortgage rates and things like that. But I mean, when a lot of the demand is coming from deep pocketed investors, how much will it be stimulated?
Yeah,
I think the
at
construction
least
boom,
in the short term.
at least in the short term. I mean, for the longest while, there's been questions about our housing market. For a long while, it's been a seller's market. You know, there's a lot of demand. You don't even know where the demand is coming from because most things that are built up, you wonder who's buying this, who can afford to pay these prices, who can pay these rents, but still, developers
You
are
can
coming.
afford to pay $180,000 for rent. I think I saw some advertising
Yeah.
today.
So I mean,
With Julian paying them kind of right there.
yeah. So I mean,
Oh man, a lot of it is offshore, but go ahead.
Yeah, I
exactly.
think so. I
So
think so as
when you
well.
look at like funds that are invested in real estate as well as offshore investors, whether it be from the diaspora or just overseas investors, there has been demand. So it's something to watch to see if that demand continues. When you look at the company guidance, they say they are heartened by strong cement demand, evidenced by several announcements from government and private developers to construct housing and luxury villas. So, management guidance is pretty much looking favorable. Something, I think, is something to watch. I'm however cognizant that, the royalty is up to 4%. So, maybe this year they can say 2 and next year they say 4. So it's a process to pretty much continue to watch it. Carib Cement, but as it stands at a P of 12 times.
Yeah, man, it's definitely considered undervalued at these prices.
Because when you look at the trend in earnings, not only on an annual basis, but even on a quarterly basis, they've been doing well. And I think one of the quarters, the PE captures the last 12 months. I believe it's Q3 last year. They carried out scheduled maintenance where they delivered like 43 million,
which is coming up this next quarter, right?
Yeah, after the June one, I think. Or which one was it? It was either the June quarter or the September quarter where they carried out scheduled maintenance, and that 43 million, would have dragged down the PE. So anticipating that they can somehow optimize, the time when they carry out maintenance and still be able to deliver great profitability, PE might even push down much lower once that quarter has been erased and foregone out of the last 12 quarters.
Yeah,
so
I think it's oversold. Definitely, there is an initial shock, and there could have been some investors who were larger who wanted to shape their position as well. So that's a part of it with the rebalancing. But yeah, sorry, I had some background noise. But yeah, the case for Carib Cement is very strong based on all the factors we mentioned. You're looking at the balance sheet improvement, as I mentioned, Andre. The asset quality is up there. The fact that there's no real substitute, the fact that there's an insane demand for inventory because of the deep shortage on the market in terms of real estate inventory. And again, we're going through a infrastructure boom. We're talking about the construction of roads still, we're having the expansion in the east. All these things happening at the same time. And when you look at the BOJ's macroprudential report, they show you household debt and how household debt is allocated. And we see a downward trend in consumer debt and an upward trend in mortgages. So, it's just a matter of having those secular trends support the stock, because if more people are allocating their resources to mortgages and away from consumer items, then it therefore means that it should have a trickle-down effect on the demand for cement.
Yeah, Julian.
Yeah, David.
I was gonna say, I remember reading Scotia Group's most recent quarterly reports, and I think they still mortgage sales are up I think it was 8 or 20% or something like that.
Yeah.
So you're seeing more and more persons go for mortgages, and the reality is, well, customer credit is still cheap. People are just gonna go and get their mortgages.
Yeah.
Because the reality is the housing stock is going up, but not fast enough to meet the reality of the environment. And out of the Trinidad Cement Limited AGM on Tuesday, which is the parent company of Carib Cement, and they're pointing out a couple of things. One such thing being that they might delay the actual shutdown of the plant by a month or two, and do it probably in either late September or late October. And we recall last year when the plant shut down, which was a massive hit in terms of earnings. And he was also pointing out that the expansion, the 30 million expansion, what they're planning right now is on track. He said he'd wait to make the Carib Cement guys here give better context when the agent comes up on July 19. What he was pointing out was that, with all goes well, the company should be able to do a lot more exports going forward. So I did the math. Back in 2012, 29% of the cement Carib produced was actually exported. As of last year, it was only less than 1%, 0.88%. And that's to kind of show you that if they're already at the maximum right now, and they are doing what? I think it was last year, March, they did 100,000 tons of cement in 1 month production, and they're going to be increasing their capacity to 1.4 million tons, and able to supply the market to about 1.1 million tons of cement, and have the export market to actually work with as well. That's just another big plus for them. While they still haven't told us how they're going to finance it, I feel it's going to be more likely debt, just because everybody's going to want to keep cash on hand right now, and Caribbean is such a company that they can easily go between debt through the bond markets and also even through the banks. And the reality is, cement prices have gone up, but construction still has to go on. You start a project, you have to finish it. 8% in January, 7% in May, and the dollar's appreciated. So there's going to be less increase in prices, but at the same time, increases have already gone through, which means in there to still the same amount of volume as last year, revenue is going to see this be higher because they have increased prices.
Yeah. And you know we keep leaving out? Home improvement and renovations.
That's
That has been happening. So even though because building is one side of the story, but a lot of people are doing home improvement and renovations. That is a big driver for cement demand. So even for existing stock, there's still demand for cement for all of those things to happen because people want the value of their home to be maintained or increased.
Yeah.
And a lot of that happened during the pandemic.
And the thing I was just gonna say, the more you're home, the more you're gonna see things to improve. The more you're gonna be making those changes, and that's a thing. Definitely.
And that reminds me, like how some persons, for example, buy their lots in St. Catherine, and as the years go by, they just build out the gate or build out the walls and everything else. And but obviously in the blocks, you have to use cement. So if you want to add on to your house, you're going to use cement. So good point, Julian.
Yeah. Julian, Blue Collar has a question for you. He's asking how has mortgage debt impacted? How is it impacted by the recent increase in interest rates?
Well, I haven't seen any preliminary data as it relates to the take-up of mortgages responding to the rate hikes. So I haven't seen a direct relationship between higher rates and lower uptake of mortgages. So far, the trend has been able to hold, but that data was a bit dated because it went up until about either February or March or April. It was the early part of this year. So most of the repricing of the mortgages wouldn't have taken effect until after those data points were shared. So we would have to wait until the next macroprudential report or two, which is normally months at a time, before we can actually speak to the interest rate impact on mortgage uptake. So it's early days yet, but right now the trend is holding steadily to the upside, meaning that it's trending upward.
All right, thanks, Julian. All right, so that was Andre's second stock to watch as Carib Cement.
Jermaine, I saw a question in the chat a while ago, and Liberty Carib Cement and a rice issue. And I was gonna say, although the Blue Collar Finance, asked about, would it make more sense to own Carib Cement through Cemex directly rather than TCL? The reality is, remember, Cemex implemented a royalty at the Carib Cement and TCL level. So they're getting 2% of revenues before you reach bottom line, which is profit. So that's one thing. And two, it doesn't matter in the day how they hold it. The 5% direct stake in Carib Cement already, and them have owning it through themselves directly or TCL doesn't really matter once they maintain control. And remember, Cemex sells a lot of services and value to Carib Cement. So the coal that Carib Cement uses for their production, coal is used for energy production and everything, they buy from a CEMEX subsidiary. When it comes on to, even when they had to do the shutdown and import cement, it's from a CEMEX subsidiary. So the reality is, once they're able to keep the value of services within the CEMEX group of companies, then it doesn't matter how they own it, because they're still getting paid at the end of the day.
I think blue collar finance such an important point. If there's so much demand and production not keeping up pace with demand, at a policy level, that's something to watch. Should the government reduce tariff on other players, get licensed to actually import cement and fill that gap.
Boy, Andre, there's something we can discuss off here, but the government can give a license the other day and never end so well. So, and remember, with Carib Cement expanding right now by 30%, it's kind of hard for the government to justify giving somebody else the reason to actually import more cement at a cheaper price.
Yeah. So it's especially when we talk about watch lists. For example, from a SWOT standpoint, you want to look at everything. So while there may be a bullish case for the stock, all of the strengths and the opportunities for it, you want to be mindful of the threats and the weaknesses of the company.
Definitely.
Yeah, at all levels, political, economic, social, technology, at all levels. So something to consider.
Agreed.
Yeah, we have to remind our viewers and investors that, especially in Caribbean markets, we don't have a perfectly competitive setup. It's not a lot of what we see in the textbook is not gonna filter through perfectly. There are a lot of factors at play. So just because something is a quote unquote good idea, or it might be a value driver on paper, there are other factors that will control whether or not it materializes. And there are things we can't say on air, but they're very much real. That essentially forces companies to actually cross a specific finish line. You have to meet a certain criteria set. And that criteria set is, unfortunately, it's not set by just us as investors. It's set by other entities, Yeah. So have a factor that in.
All right. Thanks. So David, you're up. What's your second stock to watch?
I was gonna say Jetcon, but that would be a joke. It's Tropical Battery.
Okay. All right. Tell us why.
No man, Jetcon you for the better still, but it's like Tropical Battery though still. They're so you've seen basically the shift from from Mailpac to Tropical Battery in the sense that whereby Tropical Battery kind of, didn't experience as much significant growth because everybody was stuck at home because of the pandemic. Everybody getting back out on the road right now. You're seeing the reality whereby more vehicles are needing, or more batteries are basically needing to be replaced. And on top of that, the company, there are not more vehicles on the road. And the thing is, you can't record with a battery. And while the government kind of reduced the tariff on electric vehicles from 30 to 10%, that's only 5,000 vehicles under the current phase scheme that they're doing right now. So they're kind of in a big plus right now. And I remember reading in I think it was CAC 2000 most recent report where they said that L.E.A.R.N, which is a joint venture with them and Tropical Battery, helped CAC see I think it was like 8 or 20% on their NWC bill. So
you read every report that drop?
Yes.
Okay.
It's a good look.
I got that.
That is how. So Julian, when they see those revised notices, it's either the company noticed the error, I contact them, or I contact RMOD. So
yeah, I got the impression that you did. That's why I asked, just to confirm. But yeah.
So the reason why you even got that whole list of share buyback purchases for CWJ, that was me.
Okay.
The market benefits from my active participation in the back.
No man, there's no
regulator
that is concerned. It's just it just clicked to me, so I asked.
Yeah, man, David actively regulates the market and
Exactly.
he protects our interests. Big up David.
Where we need David is in Parliament.
No.
No, as in to remind people of motions moved and all them thing there.
Oh, so we don't.
I would have just
So we
Yeah,
so
man.
we so we don't. So we don't want to go through the wrong motion or the wrong state of emergency protocols.
Yeah.
there needs to be a David in every industry,
Yeah,
in every
yeah.
segment of the economy. I do like tropical as well. I have them at sort of like the bottom of my watch list. I think there are some opportunities there. I know when I did the review for them, I was very, very curious as to see how they would go for the year. So it's one I'm keeping an eye on, but not. I mean,
It's an interesting space
yeah,
because
yeah,
when you look at it right now, you have Dollar Financial going into the lending business with respect to solar, and you have Tropical Battery having these different subsidiaries. Tropical Mobility, which is for EVs. I can't remember the subsidiary, but one specifically for financing of EVs and energy particular products. So there is a space for them to play around, and they already said that they're going to come back to the debt market to raise more capital to continue those ventures. And the companies kind of pointed out that they've benefited from the fact that their competitors who didn't have the capital to actually stock up on inventory suffered now because they're struggling to get inventory to stock back up.
yeah.
So it's a company that isn't necessarily going to be sexy, but at the same time, their numbers are basically up 100% each quarter, at least each time, from a profitability standpoint. And the reality is they still have a good amount of cash that they can use to deploy as they see fit.
Okay. I mean, again, I think I'm definitely going to be looking at their Q2 report. That's
Q3, sir. Q3. Their financial year is September 30.
okay. Thanks. So I've planned to go through it and see whether or not I need to bump it up. So yeah, any thoughts on them, Julian, Andre?
Well, I think they have a good model. I think they have an extremely strong brand. I like the fact that they sell complementary products. So they have a value chain that is circular, very strong. I think the idea that they do delivery and give support is also a huge value driver. So I like that. But again, here comes personal preference. So I prefer other suppliers to Tropical. So because of that, I mean, while the case for investment is good, if I prefer a competitor, why would I buy Tropical?
Yeah.
That's just me. I've had my experiences with Tropical, and let me just say the numbers are good, they speak for themselves and they have their following, and that's good, but maybe not for me, So different strokes for different folks. But it's not a bad company. As I said, the model is very strong. But maybe not for me,
All right, cool.
List. You heard what I said, Thai Warehouse. If Thai Warehouse was going to list, for me, so
that's a thought that has run across my mind.
Yeah. My only issue is that them close on Saturday. That's my only issue. That's my only issue, because that's the day when people run a lot of errands, and people tend to look after them car on a Saturday, It's a big
That's
day.
who Tire Warehouse closing on the Saturday. Yeah. I mean, I think that's based on their faith.
It is, I'm told.
I mean, I can certainly respect that.
I think they open on a Sunday to make.
Yeah, they do. They open on a Sunday.
Yeah.
I've been to both. I know that earlier in my car ownership days, it was Tire Warehouse for me. I don't know why. I think the persons who I spoke to referred and spoke of them highly. It's later on at it's really since investing Tropical came on my radar a lot more. I haven't, so that I did think about it briefly as well, because once a certain type of company lists, I think about all the companies in the similar industry that can potentially list as well.
Yeah.
And I saw Ryan post something about especially companies maybe of a certain size. Well, I think what's the I don't think we know, since Tire Warehouse is private. We wouldn't know what type of business they're doing or anything like that.
No. We could only guesstimate based on their footprint, but it's hard to gauge.
Yeah,
It's hard to gauge. But I think they're heavily supported though, and what I noticed is that they have opened quite a few new locations, which is indicative. Companies that are suffering don't open new locations. They don't understand that. So,
Usually.
yeah.
I guess it depends on how they open the new location, because sometimes you can grow through debt, and if you have the new locations that's financed through debt and the revenues can't justify, ultimately you may have to close it. But we don't know because it's private. So
the other thing too is I know the discussion is not around Tire, but my last point is that they sell somewhat of a necessity. Once you have a car, Virgin, you're going to need to maintain it. Because in terms of transportation, we really have no proper infrastructure. We don't have a train system, so it's not like you can take a 10 o'clock train to go to a meeting. If you want to get anything done, realistically, you have to drive.
Yeah.
Right? And then once you drive, you have to maintain the car. So those are two major drivers. Yeah, let's go back.
And the thing is that throughout this entire discussion we've had so far, you realize that it's all coming back down to right now looking at companies whose services are inextricably linked with actions to your daily lives. So TGH, we also mentioned, typical battery. What else did we mention that you can't really skip? I will mention the bank interest rates going up, so you can't really skip what's on that. I mentioned typical battery right now. The reality is no proper transportation system. At the same time, you can't use alternatives to have a massive effect because the gas are already elevated. The damage automatic on your vehicles might be another thing, which is additional maintenance costs. And the reality is that you better take certain services rather than try and save money because you might spend more.
Yeah. All right, so I'm going to pause here before we get to Julian's third pick. Thank you guys for being here, for watching, for participating. Please give the video a like. It greatly helps our channel. I'm going to also pause here for you to take a moment to follow the persons who are joining us here. I'll post which platform is best for you guys? Twitter? I don't think Andre on Instagram. He's gonna be, globe trotting and sharing his daily.
I need to try to use Twitter more often. For me, I'm a seasonal Twitter user. Poppy that note. I like.
Yeah, me too. Yeah.
Okay. All right, guys. So I'll ask you to just post your handle in the chat so persons can follow you there. But all of them post relevant and meaningful content. So take the time to follow them. Julian is on Taking Stock every week. David is in a newspaper every day posting helpful stuff. Check out his content. And Andre, I think this is his first appearance in a long time. I don't know how often we'll say Andre, but Andre did a video with us, one of our very first videos, trading strategies for the Jamaica stock market. Excellent video. If you want to learn a process or just have like a roadmap to invest, watch that video. It's called Trading Strategies for the Jamaica Stock Market. Just check that out. All right. And also, please like the video, join our Telegram group. I share that link there as well. And at the end, I'll talk about our upcoming, classes, coaching program, etc. So we'll talk about that at the end. All right. Sorry about that. That was David's pick. Was it? No. It was
David's pick.
David. Okay.
It was maybe.
All right. So any final thoughts for Tropical before we move? We'll move on.
No, none from me.
Okay.
No, I was gonna say, the reality is, anyway you spin it right now, we're just in a situation where the companies that are essential, not necessarily essential to quote unquote lifestyles, but just survival, are just going to become more of paramount interest as we go through this current economic cycle.
Yeah.
Rising interest rates, rising commodity prices, shortages and so forth.
Yeah. If GK was here, he'd be saying the same thing that he's probably said for the last two episodes. He'd be looking at food. So for him, it's companies like Seprod or maybe a Detail or any companies in that space. I know it's usually ones that GK would focus on. Um, so yeah, I agree. I think it's an excellent way to have a it's an excellent way to shortlist companies, right? You just look at what is happening around you. You've seen the discussion we're having here. We haven't looked at any financials. We haven't gotten into anything technical. We're just having a discussion that can lead us to a path to having solid companies in our portfolio. So just letting you guys know that process. All right. All right, Julian, you're up next.
All right. So my watch list, the next stock on my watch list, boy. Sometimes in life you really have to just humble yourself and go back to the drawing board. So the stock is I
Wait.
create.
Okay, I thought you were gonna say Siboney because I was just curious.
No man, no, no sir, no sir. Me I must lose more work. No sir. My employer would hear about that and say, what?
Okay, okay,
Yeah, man, I'm
okay.
just joking. But yeah, man. So in terms of I create, right? We have to know deal with things that are concrete, things that are factual. There's no more theory, there's no more rumors based on the deals that the company has in the pipeline and the deposits that the company has put in place. So for example, when they were doing the acquisition of the I just won't tell you the name of it. I think it's Video Vibe. I just won't tell you the name.
Get paid or
Let's
visual
get
vibe.
Visual Vibe, sorry. Visual Vibe,
Oh,
and also get paid and the other value creation channels that the company has, such as real estate, construction project. You have to understand that the economics of the business has changed. So everything else will change as a result. Now, what's interesting is how Tyrone can continue to articulate the case for investment because some of these business lines are kind of dissimilar. So it one has to be careful that it doesn't come off as okay, the company is really on a rebound path and they pretty much just turn into things that will make money
Yeah,
because you don't want to be seen as making money for the sake of making money, but you want to stick to an area where you're seen as an expert. The good thing is a lot of them are related to the RNG economy and creativity. So there is some relation there. So it can be seen as the ultimate creativity stock. And I think if that's what he wants to push it as, he should frame it as such.
yeah,
But the case for investment has changed significantly, and I would like to see more, um, more of what is promised materialize.
yeah,
So I am, in fact, surprised for the better at how things have changed. I want to see the company succeed, and I try to call a spade a spade. I've said before. What we had before were announcements and plans, but now we have things that are a little bit more concrete. The
yeah,
last quarterly result that was posted had a significant change in profitability, which again changed the profile of the stock. So, want to see more of the good stuff, and I wish the company and all its related parties all the best because
yeah,
more wins for the market, all the better.
yeah. they've definitely raised the expectation of investors. They have fans, the word that you use, Julian. We have a few of them in our Telegram group. Fans. I won't call any names, but for me, and what makes it interesting for them, I do think that they did what they had to do to get to this point. It, as a business owner, I can certainly relate to you having to take a sort of detour to say, well, let me shore things up and then I can get back to focusing on my core business. But I think also the core idea has morphed, it has evolved, and there are opportunities that they're taking advantage of with the partnerships, which may take time to materialize. But to me, they've widened the scope of opportunities for them with these partnerships. I think the visual vibe one makes sense for what I've heard they're trying to do. I think it gives them an opportunity for greater reach. If their brand is now having that exposure. I always saw them as a company that had an opportunity to be a global company because of the services that they offer. It takes nothing for them to offer maybe courses or content or training that has a global appeal. So to me, there was no barrier for them in terms of growth. But now they've started to put some things in place. They've taken some risk, and that is good. It will either go really well, or maybe everything doesn't work out, but enough to still bring them to that next step. I love to see the kind of intentional focus for Tyrone to let people know what is happening. I think he's definitely over communicating as opposed to some companies where you have no idea what's going on. Of course, at some point, you just want to be sure that what is being communicated is going to be delivered. And I think he understands that as well. So, having us being more informed is definitely changing the sentiment around the company. Persons who would have, seen it a certain way a few years ago are now seeing it differently. And so they're building up expectation. And I think it's going to be important that they deliver on the expectation for things to remain growing for them. So those are my thoughts on them.
My 2 cents would be, I guess some people would not really appreciate the fact that, most of these acquisitions would have pretty much deviated from the core business and so forth. I'm more of the view that, when opportunity presents itself and you have a vision and you know how your core operations would benefit, or if it's just straight for the shareholder value, I think there's nothing wrong with seizing those opportunities and so forth, So it's an important space to watch to see how those operations play out and how there'll be synergies or how each individual line of operation will benefit. Because I think with the visual vibe operation, they're a creative institute. They, in terms of digital marketing and all of that, they can create content, and then the visual vibe that has screens across the island, they can actually show their capabilities with respect to digital marketing on those screens, and then
Exactly.
the average person will walk past and see a wicked advertisement and him say, yo, I like that. The business owner will say, hey, I want an advertisement like that. Or the consumer will grab their attention and know about the product that's been advertised or so forth. And then, it's possible that I create core operations will benefit, as well as the other ones, the other operations.
Yeah, agreed. So I think so for everything, I wish there's a little bit more insight into the get paid transaction. I wanted to see a little bit more to understand that, but I was told that there'll be more information revealed later on. So we'll see when the time comes. But as I said, they've been building expectation, so they're going to have to deliver. So I'm waiting for that. Because for me, I take it's good when you can build anticipation by sharing an announcement or an acquisition. At some point, you're going to have to see the impact that that's going to have on the business, right? So I know that our market likes to respond to news. I respond in terms of now seeing that being integrated and it leading to a positive impact in the business. Exactly, right? Because for some, they're thinking, okay, news at a short-term pop for me, I make a quick buck and I'm going, but I'm looking for a company that can, remember I said my strategy at the start, I'm looking for companies that I can invest in long-term and continue to build my position, continue to extract value from that company. So what I'm hoping to see from them is just that sustained growth in terms of their profitability. Can they manage successfully all the things they're now attempting to do, right? Because now instead of managing one company, you're trying to integrate multiple companies. Who is going to oversee those companies? Do they have the expertise to oversee those companies? So those are some of the questions that may come up. Great potential. There are definitely some things that would need to fall in place, but they've been setting, as I said, this expectation that I think a lot of persons are waiting to see what happens as well. All right, David, do you have anything to add for iCrade?
I was just gonna say that the company continues to work on just optimizing itself a little bit better. It's good to say that the company generated a decent amount more revenue and profitability in the first quarter, but I believe I need to focus right now, especially on receivable collection. The good thing about Visual Vibe is that if all goes when they successfully complete the acquisition, for one, as a subsidiary that you actually can give the company straight cash flow towards other projects. So that's going to be a pretty interesting thing to watch play out, because I remember Tyrone, speaking about a company, which is probably Visual Vibe, and about the cash flow, about the profitability and XYZ. And the thing is, when this company has those billboards or those spaces, most of the is just leasing it out from the landowner, and they don't think else to do. Probably periodic maintenance to maintain the physical infrastructure, but otherwise, there's nothing else to really do for the company otherwise than to just collect the client's money to advertise the advertisement and just move on.
Yeah.
But I believe iCrade still needs to work on just finding its right center and just optimizing itself. Like what I'm seeing in terms of the bounce back over the last 3 or 4 years of trying times. It's good to see the company define its bad past and moving forward a brighter future.
Yeah. Thanks, David. I'm just kind of posting everybody's picks again for everybody to see. And I'm going to share my final one now, and then we take any questions. So for me, the last one, as back and forth about this one, there's the one that I'll share and a runner-up. Everybody knows my favorite company right now. We talk about it in the group all the time, the infamous stock A. So I'll just say, for those who know, you know, but the one that I'll share now in terms of one to watch is Mailpac. I think they have fallen a ways from $4, I think $4.15. So they're almost all at about almost 50% down, maybe 40% down from their all-time high. I think what happened with COVID is that the trajectory for the company was accelerated in terms of expectation. And so persons were anticipating them to do as well as they did in 2020, which was almost impossible. But I think based on how low the stock has gone, there will be, opportunities maybe in 6 months to a year for them to start getting some attention again. Just even looking at the chart here right now, it has come a long way. And I think right now, currently, let me try and check the PE now is currently about 18, 19, and I think that well they do have a dividend coming up, but I think in general their appetite for acquisition, their appetite for expansion, new business lines, etc., makes them an interesting one for me. I think that there are some opportunities long term for them. So it's my second stock to watch. So any feedback on that one from you guys?
Yeah. Andrea raised a point earlier about consumer discretionary, and I think that most of the activity that flows through Mailpac are discretionary items. So
Say that.
within the context of
Even
everything,
even on the commercial side, though, because remember they have a commercial side, not just a consumer side.
yeah, no, definitely. I'm just talking about the weighting and revenue share. I just think that the inflationary pressures might, if it is that it causes a if it is that the cost of living crunch start to show up in cutback in spending, it
Mm-hmm.
could adversely affect Mailpac in terms of
Yeah,
revenue.
man. I see what you're saying. I see what you're saying.
Because those revenues would be cyclical, to my mind. I'm not sure what subsegments drive Mailpac because I don't have that breakdown to know, okay, most of these purchases are related to a certain area, so I can definitely gauge how sticky those revenues are. But just on the face of it, because it is consumer discretionary, if the cost of living crunch leads directly into um, a cutback in spending, then it could adversely affect Mailpac. But that's not to say it's a bad company. I think they have a lot of cash. They have a lot of room for acquisitions because of that cash, especially in an environment where we're seeing some dislocation or stress because
And
the
it's something we've seen them do. They've done acquisitions before, so we know that it's something. I think when 876 did the interview with Kari, he
yeah.
said it's something that they're interested in, something that they look to do where possible.
And it's in Kari's DNA as an investor. He's that type of person. His business model is built on M&A, and he has the experience, so it's highly likely
Yeah.
that a lot of their growth will be inorganic. So we spoke to the organic side, but if they can compensate for that on the inorganic side, that could change the argument. So
Yeah.
Yeah, I definitely agree with Julian with respect to the consumer discretionary as well as the opportunities from an inorganic standpoint. Pretty much
I think
Mailpack
they may announce the buying out ship me tomorrow, right? Who knows?
Because I mean you have a lot of players in that space. So
yeah,
Yeah.
there's room for consolidation easily.
room for consolidation. So I mean, I've always liked Mailpac, and I think especially over the long term, it's definitely one that will do well. I mean, anticipating that internet penetration, goes upward over time, I think Mailpac would be poised to benefit. And once the environment is suiting, then we should see some um, greater profitability as well as revenues. So I think it's definitely one that will always be watched, at least from my standpoint, in that space.
Yeah. I know what you mean. Because I really think so. For me, when one of the factors for me that makes a company fall within my radar is its price, how it's been trending, and for them since that high, I think of January 2021, where it went to 415, it's been steadily going down. And you might have had the only time it seems to have a run up is around dividends, right? When there's a dividend announcement and somebody's trying to capture some dividends, they may do a short term trade. So it may gain a 10 to 20% during those periods, and then it finds its way back steadily declining. So for me, that means that there's nobody really giving the company much attention, and it now has the opportunity, since it's a relatively new company, listed for 2 years now, 3 years now, it will have, I think, the room to just continue to do its thing. And I think as I said, in 6 months to a year, I think the outlook on it by the market may change. All right.
Yeah, I agree.
So, I mean, that's why it's on our watch list, because if everything was going well for it right now, it wouldn't be interesting to talk about. There has to be some amount of risk there, I think, for it to be a great opportunity, right? Because the obvious ones to speak about, I'm glad that nobody mentioned any IPOs, because to me, and I agree with Chike on this, first year for an IPO is always a tricky year. I think companies schedule the IPO release with some very strategic announcements and news that kind of makes persons, like, there's this kind of buzz or hype around them. So I don't think it's really, I like to see a company when it's just a regularly listed company. It's not being put through the same rigors that everybody would as an analyst, and not this IPO buzz or IPO pop, and then I can properly see how they can perform. So why is smiling, Julian? I mean, that's just me, because for me, I think that all IPOs within the first 3 to 6 months are typically overvalued, right? Because most of them are released close to fair value. So if they gain 200, 300% and they were close to fair value, then they're going to go into the region of overvalued, right? That's a reasonable assessment. So the longer it's away from that point of listing, the more you can see what the company is capable of. Because again, I'm thinking long term. Most persons rely on IPOs for their investment strategy. To me, what if no other IPO is announced for the next 20 years? What's your investment strategy? All right, so I look for companies that can actually do well outside of those, right?
Boy, no more IPOs don't come for the next 20 years. No man corner dog. That's all I have to say.
Enough man fix.
Yeah. Yeah.
Yeah, man. So closing thoughts, guys. Anything that you want to add? Anything to kind of wrap things up? I think it's going to be a good year overall in terms of the market, because a lot of companies were depressed over the last 2 years, I think. So a lot of them, I think, Q2, Q3 will have, you're going to see a lot of best quarter in 2 years, or 100% growth from last year, or 50% growth in this. I think we're going to see a lot of that for the next earnings season. And it may cause some investors to overreact. Some people may overpay for some, and then things may level off for Q3 and Q4. But I think because of the removal of the curfews and lockdowns at the start of the year, most companies are having their first quarter without any form of restriction. So a lot of their statements are going to look very, very attractive for this quarter that we're in right now that's about to end.
Yeah, to throw in my 2 cents, I'm somewhat cautiously optimistic, amidst the environment, all the concerns, and on a global level, as a local level, there's the war in Ukraine, rising commodity prices, supply chain disruptions, as well as higher inflation. So normally, in a scenario like these, especially, the possibility of a US recession, history would probably show that it doesn't really bode well for equities, and especially when less risky fixed income assets look more attractive from relative to equities. One thing to bear in mind is that in the market there's institutional investors as well as the retail investors. So while the retail investors love stocks and it's the go-to asset class, for the people that are managing billions of dollars, sometimes they are incentivized to, once the climate doesn't facilitate equity growth or growth in corporate profits, they tend to shift to safer assets, that being fixed income. I mean, you have some sovereign bonds that their yields are pretty attractive, especially relative to where they've been. Because for the longest while, fixed income wasn't really delivering much. The policy rate, I think it was at 0.5% for the longest while. Pretty much our interest rates were down. So what that happened was that equities was the more attractive asset class. So that's now changing. So, I plan to be guided accordingly and, pretty much watch the macroeconomic data. As long as inflationary pressures persist, I believe the central bank will, try to bring it back down to the desired range of 4 to 6%. Right now, we're at about 11, and they raised the policy rate today again. So I plan to, keep focus on the consumer index because, once macroeconomic conditions are favorable, the sentiment to equities overall as an asset class is, more ideal relative to the outlook for it right now and the current environment.
Okay. Julian.
Well, I have a bearish tilt. Yes, there are opportunities here because we're able to have a robust discussion around our watch list. But at the same time, when you think about rising interest rates and the cost of living crunch, and the fact that next year is supposed to be more of a turning point as it relates to growth, as opposed to this year, because this year is just a transition period. We're going from a year of high liquidity to a period of low liquidity. So this year is a bridge between the two, right? So in other words, things are likely to be tighter next year in terms of liquidity, because we're seeing rates normalize now. Because even now, when we look at interest rates and the fact that they've been repricing aggressively on a historical basis, interest rates are not that high in the grand scheme of things. Not yet, at least. We haven't gone into a high interest rate regime yet, if that is to even happen. So what we're seeing is a normalization of rates, but that's happening quickly. And what's happening is that funding is getting pulled out of the system quickly, meaning that it's moving from risky assets, risk-taking assets to assets that have a lower risk profile, as Andre mentioned before. So what that means is companies coming to market, they might not be able to raise as much capital as they would have, right, had conditions been more accommodative. That's one. Two, in terms of the run-ups that we see in stocks, because margin rates are likely to be higher because of higher interest rates, it means that investors might take positions that cause them to cut their runs.
Yeah, I thought about that.
In other words, all right, let's just put it into a more direct scenario. And this is just my opinion now.
Yeah, man.
If it is that dollar listed in January, February, it's likely that it would have run in a different way than it did just now. And I think the changing conditions have a role to play, because I think that in terms of gas prices, in terms of food, and the interest rate story is going to become stronger later because credit are just starting to reprice. It hasn't caught up with the policy rate yet, and the policy rate is likely to go up. So the fact is, when the interest rate factor comes into play, in addition to everything else, we likely to see conditions tighten a bit. But that's not to say that money can be made. It's just that we have to set our expectations accordingly.
Yeah, man. I agree with everything that you're saying, and I agree with that point, especially around dollar, because based on how the first few days went and what happened from there, that was interesting to me. I think that that sort of activity is likely to continue, at least in the short term. And what that tells me is that, one, to me, it presents me with opportunities. I mean, in general, I don't believe in overpaying for any investment, but my style is different from a lot of people. But for me, I still try to get what I consider low prices for my investments, because for me, I'm trying to hold them long term with the understanding and expectation that as things get a little tighter, maybe some of these prices, some of these valuations that we're seeing are going to get more and more conservative. So for me, since I'm holding for mid to long term, I'm not interested in buying a company. As I said, for me, if it is that a company is considered fairly valued around IPO, then it goes up 200, 300%. I'm not interested in purchasing at that point, because for me, if it is that there's going to be some sort of correction, or maybe there's an offer that is announced on the market, because we've seen this, right? And a new IPO is announced, then all of those gains that were there, a lot of these valuations are going to get a lot more down to earth. And so those times to me are better to buy than at a recent run up. And that way it allows me to now comfortably hold a company for a longer term, because my average price is not at risk of being in red, even in the short term, because of the prices that I'll buy. So for most IPOs, I'm waiting it out. If I don't get good volume to start, I'm waiting until either another offer is out or there's something compelling that makes a lot of people sell off. And then that to me is usually a good price. Spurtree was the only one that didn't, I think, give me that sort of correction I was hoping for, because it held once it went above $3, it held there pretty for a while, and then went up as far as $4.50, and it's holding around 380, 390 right now.
Yeah.
So yeah, I agree with everything that you said. I think persons should understand why they're investing, how they're investing, the way that they have chosen to. I think those with flexibility will be able to take advantage of opportunities, meaning those with adequate cash, or you may have to find yourself taking losses to jump from opportunity to opportunity, something we talk about in the group all the time. And so it's important to invest with an understanding of what's happening around you. So yeah.
Just to add to your point, Jermaine, like even investment horizon is an important factor as well, because as you said, for persons that are invested for the long haul, now is a perfect time for them to execute dollar cost averaging, pretty much average down on the stocks they like. If you like that, if you like NCB at 250, you should love NCB at $90. So it all boils down to all the different factors, all the different traits of different investors, risk appetite, investment horizon, things like that.
Yeah. Agreed. David, any final thoughts before we close it out? All right, so David might have stepped away. All right, guys, thank you so much. Really appreciate it. Hopefully you guys found value in it. I still don't see enough likes on the video. Please take a moment to like the video before you go. I'm going to be sharing some announcements. I'll ask you to stick around for a few minutes. Those of you in the audience, I don't know if you guys want to stay on screen while I'm doing the announcements. Feel free to stay, or if you choose to go, that's fine. Thank you so much for being here. I'll try and share some clips of our discussion over the next few days. So really thank you guys for being here and sharing your watch list with us. Right. So guys, a couple of announcements. So we would have gone through and shared. So we had a class recently that was our biblical investing class. So that video is available. We decided to leave that video up. Let me actually see if I can switch views here. Yep. So we've left that class up for you to check out. We are considering having a class over the summer, because we have a lot of new investors joining our group, and we want to be able to provide some outlet or opportunity for those persons to get the basics down. So that's something that we're working on maybe in July. If you're interested in that, just leave me a comment under the video and let me know if you'd be interested in that class. I'll post a comment asking if persons would be interested in the class, and I'll watch to see how many persons like that comment or comment under it to see if it's something that you'd be interested in. I'll also be asking in the group, etc. That's one. We do have our coaching program that we launched earlier this year that is specifically for persons who, in addition to investing, would like to learn about how to manage their money, how to do a budget, how to get step-by-step guidance on how to invest. So we take you through an 8-week program, And then we provide you with templates, videos that you can access, a whole bunch of resources that can help you manage your overall finances. And we have about 2 weeks dedicated to investing, and we give you access to all of our previous classes in terms of stocks for beginners, the financial statements for beginners, etc. So you get access to that as a part of the coaching program. Next up, we just a reminder that we do presentations for schools. So if you have a school that would like to be introduced to investing for your students, or you have a church, a youth group or a Bible study group that would like to learn investing, we do those presentations for free. Let me see what else. There's so much to share with you guys. There's also our newsletter. So let me share that link now in the chat. This is our newsletter. So feel free to subscribe to that. We'll try and share actually a snippet, not a snippet, an overview of this discussion in the newsletter. All the watch list for each person and the main points in sort of like a summary form. And that's published at the start of each week. Subscribe to that. And I think that's it. Thank you guys so much again for being here. Really do appreciate you being a part of our community. Subscribe to the channel if you have not done so as yet. Join us in Telegram where the conversation continues. Really do hope you enjoy the rest of your day, and I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N. Grow Invest.